Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Interesting day for sure.
The U.S. Senate has passed the proposed infrastructure program, $550 billion a number. I think most of us would find it hard to get our heads around. Is this going to be an effective way to get the U.S. economy up and going after COVID?
Well,
plus you need the stuff repaired anyway.
Yeah, I think these sort of, I don't, expect it to bring an economic boom. I'm sure it'll help in some regards. But I think the bottom line is, when you look at the U.S. economy, last year, the shutdowns, the lockdowns, caused an incredible, recession, in the United States, across the entire world. But coming into this year, the U.S. economy, basically, it's like a car in which someone put their foot down on the pedal and it accelerated from 0 to, say, 70 miles an hour, and now the foot has come off the pedal, meaning that the rate of acceleration in growth has reached peak. It peaked last month. This is what the GDP data and the statistics, underlying that, demonstrate. So I think we've seen peak in the growth rate, and now we're going to see that come down, and that could have implications for the stock market, for the economy. And we've seen globally signs of a real slowdown, particularly in Asia and China, because of the COVID situation there getting a lot worse over the summer. And we've seen interest rates in the United States and the bond market really take a sharp move down. So the stimulus bill, I think it's one item that can help the economy not go into recession, but it's also, I think, inevitable that the U.S. government is going to be spending money, astronomical sums, running a deficit, because we are in a quantitative easing bond buying operation in the financial markets. It went to the moon last year when the stock market crashed and the Federal Reserve engaged in these massive QE operations. What money, what it involves is buying treasury bonds, and that money goes into the government and has to go somewhere. So I think it's being spent in programs like these stimulus packages, and there's no sign that process is really going to ever end anytime soon.
We have employers, again, complaining of a labor shortage, and it's not just minimum wage paying jobs like restaurants or hotel workers, but engineering firms in Toronto now are offering to help you make the down payment on a house if you promise to stay there for 3 years. Are you seeing the same thing happening in the U.S.? People are taking extraordinary measures to retain and recruit new talent.
Oh, yeah. I mean, companies are offering bonuses, to get employees just to sign up. I don't pay that close attention to it because I'm not in the job market myself, but I think I saw somewhere, some company, might have been McDonald's, was offering like a $500 bonus to employees. Might have been Walmart, but something along those levels. And I was like, well, that's kind of interesting. I don't know, how long an employee would stay, then just look for another place where they can get a bonus check. But one thing about this whole situation, and it occurred to me, especially the stimulus bill, when it comes to investing in the stock market, one thing I haven't seen, which I typically would in all my years of investing and trading, and is that whenever the government would have a big economic program, I would see articles and sometimes advertisements to buy trading services that would help you find the stocks that would benefit from these new programs. And interesting enough, I'm realizing as we're talking, I'm not seeing anything like that. And I think this is something telling about the financial markets and where we are in them. We've had millions of people, I think the estimate's like 20 million, come into the stock market in the United States for the very first time in the past 15 or so months, ever since the March crash of last year. Many of them going on to Robinhood, chasing momentum stocks. 50% of the trades on Robinhood are for crypto or call options, which are highly speculative, and the rest of them are basically trying to chase stocks that are going straight up. You saw that with AMC in January. GameStop and AMC in January, then AMC again in May. And last year, just about every month, there would be dozens of such stocks. And if you got in early on these trades, it then got out, they worked. And Bitcoin, I think, was sort of the same sort of trend. What's interesting to me now is, I think this is why you're not seeing these stories, because people aren't interested, these new people in the market, they're not interested in trying to pick out, let's say, stocks that might go up over a couple of years because of a government program. They want something that's going to go up instantly in a week or two, sort of like moving like a cryptocurrency. That's also why there's a high interest in call options, because you can do bets that will work or not work, in a month and try to hit a massive return. So this gambling element in the markets is making it so people aren't so interested in fundamental analysis or, big stories, about here's a big trend and how you can really get in on it. And the point of this that I want to get to is right now, there aren't many momentum plays working at all. There aren't many stocks shooting up in the past month like we saw AMC or GameStop or these cryptocurrencies do. Stocks like Peloton last year, Square, or those cruise lines. I think it was in May of last year. Airlines, casinos. There just aren't any stocks doing this except one.
Robinhood.
And that is Robinhood. The Robinhood stock opened up, did an IPO 2 weeks ago, and went from $35 to $85. And now it's at $55, and it is now the 12th most owned stock or position in the top 100 Robinhood list, the most owned positions. So to me, this is very interesting that this is really the only momentum play going on right now, and in the past there are dozens of them. And to me, this is an indication of a very narrowing in the stock market of trades that are working, things going up. We saw the internals of the stock market start to go down roughly 6 weeks ago. This means more stocks have been trending down than up. Nonetheless, the stock market averages, they did make a new high. They've barely gone anywhere ever since, over the past 6 weeks. The S&P hit 4,400. Now it's at 4,440. It's hardly gone up at all. Most of the momentum shifted into, inside the S&P. Facebook, Amazon, Apple, Microsoft, about 6 big cap tech stocks that reported earnings 2 weeks ago. Now those stocks are, for the most part, not doing anything. They're still off their highs. They sold their earnings reports. Apple's below its high. It's actually down today. Facebook, same situation. So we're seeing, I think, signs of that we're, at the end of this giant rally. It doesn't mean it's going to crash, but at the very least, I think the market is setting up to really do nothing or take a big breather for the weeks or months to come. And that's why there's very few momentum stocks even working at all or happening at all.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what's going on with gold?
Well, gold's in an interesting position right now because, we saw in June the price of gold got to 1925. Actually, should back up a little bit. Last August, it made a peak. That's the last major peak in gold. Fell into March, where it hit 1675, bounced up to about 1775, made a double bottom, and then rallied all the way up to 1925, then came back down, and yesterday it had basically what amounts to a flash crash, retested the March-April low, and appears to be in the process of making a bottom off of that level. My favorite indicator in trying to determine, the trend or pick a short-term bottom or top in gold is the GDX divided by GLD relative strength index. The GDX is a mining stock ETF. What this indicator measures is the performance of mining stocks to gold. They tend to go up faster than gold when it's bullish and fall less than gold. Also, when you're in a bullish situation or close to a bottom or making a bottom, and that indicator is doing that. So that makes me optimistic that we're forming a bottom here and should turn up. So gold, is falling this week. I think today is a good day to try to look for, a buy point. And at the same time, commodities as a whole are standing fairly firm. The CRB index made a peak in May after having a tremendous run for roughly 12 months and has gone sideways. And an ETF that tracks it is GCC is traded in a 5% range with support at 2150, and it's just held that, and it looks like that's in a good buy position. An ETF I own, the DBA ETF, is at 1903 and resistance is, around 1930. So commodities as a whole, have consolidated, or are still consolidating, and look constructive, and I think that's also positive for gold and silver. At the same time, we've also have seen a pullback in oil. In fact, oil made some headlines yesterday also for having a 4% decline before the market opened, but it's it's fallen about 10% overall from its high of June. Seasonally, oil will make a peak in July and correct. So it's done that. I don't think it's going to go straight up to a new high, but, it's near its 250-day moving average. It's probably going to go sideways. At the same time, the XLE exchange traded fund, which tracks energy stocks, has held up. Barely dropped at all yesterday. And if you look at a chart of that, it's consolidating between 48 and 50. It's been doing that for 2 weeks. Looks like it could turn up and break out of that. So it's at a really good entry point right here. So I think if people want to make money trading, investing, the thing to do now is avoid these momentum stocks because they're frankly not working. Robinhood's like the only one that's happened, and it's already stopped. It already peaked. And look for buying dips in commodities and gold and silver, because this is also part of an inflationary trend that's likely to last for years. And at the same time, I should say, when it comes to something like Robinhood, the ultimate problem with these type of trades is they're extremely short-term orientated because they have to be, because the stocks are so highly valued that they make absolutely no sense from an investment perspective. For example, the price to sales ratio for Robinhood is 24. 2 is considered fairly valued. So the valuation is completely insane. And that's why, it's already fallen 30% from its high. So that's not the type of trading or investing I care about doing. I try to buy things that I feel like I can hold for quite some time. And I think now is the time people can pick at energy stocks and mining stocks, also.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.